What you're looking at here is the 5-day chart of the price of crude oil. And you can see that oil has come down quite a bit this week from a high on Tuesday of over 123 bucks to a low on Friday of under $109. Oil did come up off of those Friday lows, finished the week around $110.48, and quite a bit has been made of this decline in the media. The primary theory and headline you'll see bandied about is that investors fear that recession in the US will lead to a decline for crude oil and a drop in its price. However, if you look at the 1-year chart of crude, you can see that it's been moving steadily higher since November of last year, and this is more likely just a routine correction in a bull market. So I wouldn't get your hopes up that the price of gas and the price of energy are going to be coming down anytime soon. In fact, there are a number of fundamental factors as well as policy factors that I believe are going to lead to much higher crude oil prices in the very near future. And that's what we're going to talk about in today's video. So let's get to it. Okay, so first of all, the fundamental picture for oil. We got this headline here from oilprice.com on Friday. Gazprom Neft CEO, Russia already exports half of its oil to Asia. And the gist of this story is that before the invasion of Ukraine that kicked off in February, about 75% of Russia's oil exports were headed to Europe. And now, following the embargo and the sanctions related to that conflict, over half of the crude is now being shipped to the Asian market. And so Russia is able to find a market for its crude oil regardless of the sanctions and the oil embargo, but as a result of those policies, we are going to continue to see a very tight supply in Western energy markets. And as long as this conflict and these sanctions remain in place, I think it's very unlikely that we will see under $100 oil again. I mean, it could happen. I guess we could see a spike down, but if it does drop below $100 again, I think that will be followed by a swift reversal to the upside. Now, it's not just the fundamental picture here, though. It's also the response of our leadership to these rising oil prices that is going to guarantee that they remain elevated in the future. First of all, just today, we got this headline from Fortune.com. Yellen says elevated U.S. inflation locked in for the rest of the year. Holiday gas tax worth considering. And so now Yellen is telling us that inflation is likely to remain elevated for the rest of 2022. And if she's saying that, somebody who has told us that inflation was going to go away, it was transitory, if even she is now capitulating and admitting that inflation is going to get worse, I'm expecting that inflation is just going to basically get out of control in the near future. And this idea of a holiday gas tax, this is an example of policy that is going to exacerbate the problem. And we're going to see quite a bit more of that in the rest of this video, so stick around because this is just the beginning. But think about it. If you reduce the tax on gas, yes, that will provide some short-term relief to consumers, but it is also going to mean that gas gets cheaper, so more of it gets consumed, and ultimately that is going to lead to a much tighter supply problem, and at the end of the day, higher prices down the road, plus a decrease in tax revenue, and in the end of the day, that means that more government spending has to be financed via the printing press or by borrowing, and so that is going to contribute to the inflation problem. But this type of short-sighted temporary policy solution seems to be a specialty of our leadership at the moment, especially when you consider what they're doing with the Strategic Petroleum Reserve. They're going to be selling up to 45 million barrels of oil from the reserve in a politically motivated attempt to bring down the price of gas for consumers. And if you think about this, the point of the Strategic Petroleum Reserve is not to ease consumer pain. It's there in case of geopolitical conflict, in the event that we simply cannot get oil from other sources and we have to have it to do certain functions of government or the military, but instead it's being used as a political tool, and this will bring the price down temporarily, but of course that's simply going to lead to more consumption, which is not what you want in a tight supply situation. And then once that oil is gone, it's gone. It's a temporary solution. And also in the future, to the extent that they want to refill the Strategic Petroleum Reserve, they're going to have to go out onto the market and buy that oil back. So the ultimate outcome of this policy is going to be that, one, the petroleum reserve is depleted, or two, if we fill it back up, they're going to have to bid the price of oil even higher to refill it. So it's really a zero-sum game. This doesn't help at all. All it does is it makes us less ready for geopolitical emergencies and disasters with our strategic reserve. And at a time like today, where you've got open warfare in Europe and China threatening to invade Taiwan constantly, this seems to be a poor decision. But it's not just the Strategic Petroleum Reserve. That might be forgivable. I don't think that that's going to harm production in the long run, but don't worry, the administration has that covered as well. And what I'm referring to is this windfall profit tax that we keep hearing about on oil companies. Now, this is a story from the beginning of June. White House weighs oil profits tax to fund consumer rebate. So you literally couldn't screw this up any worse, to be honest with you, because on the one hand, you're going to be taxing companies, their profits, so that is going to disincentivize them to continue producing more oil because, I mean, why do oil companies make oil? They only do it for their profit. They're not doing it for the good of the country, and nor should they. They should be doing it because they want to make money. I mean, that's how all businesses operate. And if you want more of something, you subsidize it. If you want less of something, you tax it. And so if you tax profits from producing oil, you're going to get less oil production in the long run. Companies will not be incentivized to use capital to increase their production because why would they? They're just going to have their profits taxed. And then on the other side of this, they're talking about using the revenue from this tax to fund a consumer rebate, and that will simply cause consumers, again, to consume more oil. So this is going to lead to shortages. This is going to lead to ultimately much higher prices as companies will have no more incentive to increase production. And the White House seems to think that oil companies have a patriotic duty to lower gas prices. And I do find this quite amusing as the government and the Federal Reserve have created all of this inflation. They've created this situation where commodities and gas prices are skyrocketing. And now they want to blame the companies that actually do produce oil. But I'm going to tell you, they're not going to do it out of a sense of patriotism. The only way you're going to be able to get oil companies to produce more oil is to make it lucrative for them to do so. That is, after all, why they are in business. Now, I guess you can try and nationalize the oil industry or something like that, and they're not talking about that at this point, of course, but I would not be surprised if in the years to come we see discussion of that. But I can tell you, all you got to look at is Venezuela and how their nationalization of their oil industry has gone. I mean, they've completely gutted their ability to produce any amount of crude oil there. They've completely gutted their refining capacity. And however you feel about oil companies and capitalism, I've got to tell you that if you try to nationalize companies or tell them that they have to do things out of a patriotic duty, the end result is not going to be very pretty. And ExxonMobil and Chevron, they did push back on this blame that the president has been throwing on them. You know, the president says that these are greedy companies, that they are exploiting consumers, and it's not the oil companies that are exploiting consumers. You know, it's the government and the Federal Reserve, which create currency, spend it into existence, benefit from that, and then that penalizes all the other consumers who are spending in dollars because the dollars that they have been devalued. I mean, it's as simple as that. And then finally, here's a piece of policy that thankfully we didn't get. CNN reporting that the White House is now reconsidering this idea, but originally the Washington Post had reported that the administration was considering creating gas rebate cards to distribute to consumers. And the idea of fighting energy inflation with basically more inflation, just creating more money and distributing it to consumers. I mean, I guess that the White House has at least learned some kind of a lesson from the outcome of the stimulus checks that were sent out over the past 2 years, as we are now living with the consequences of that. And they wised up a little bit. They didn't send out these gas cards, but this gives you an idea of what the leadership in Washington thinks about energy, what they think about ways to bring the price down, you know, distribute cards with fiat currency that can be used to bid up the price of gas. That's their answer to high gas prices. So it shows you they're completely out of touch with how markets work and any actual way to bring down the price of oil. They're grasping at straws. They're doubling down on these failed policies. And that's why I don't think the price of energy is going to be coming down anytime soon. So prepare yourself accordingly. Get ready for much higher gas prices as we go into the winter. And I'll catch you next time. Thank you all very much for watching. Smart Silver Stacker, out.